Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and we specialize with investment real estate only in the Tulsa and Oklahoma City markets. It is Monday, looking at my watch, it's August 5th, and last week was something else. I'm telling you, I haven't seen so many changes happening in real estate in a long time, and I'm not talking about what's happening with buyer's agency or anything of that nature, but what I'm talking about is two very, very important items to anybody that wants to buy a home, to either to live in or to be an investor. The first is inventory. I'm going to save the best for last. Inventory always increases in August. And why is that? Well, because school starts the middle of August, and people who are owner occupants have already bought, already moved in, already showed the schools they're living there. And so what happens is more houses stay on the market. Makes things more negotiable. In fact, we've seen some new construction deals that we haven't seen in a long, long time. So everybody wants to keep their sales up. And this is true in both the Oklahoma City and the Tulsa markets. Even the builders that don't necessarily discount, but may limit the inventory they have available to us to sell to our investors, change things completely. They just, whatever you want, Joe, it's fantastic. So they all know my name in August, and that's really a nice thing, because they also know that we sell more investment property than anybody in the Oklahoma City and Tulsa market. That's what we've had a reputation for the last 20 years. So the thing is that we're the first go-to when they need investors to buy homes to keep their numbers up. So if you're looking for deals, we have them now. It's a great time for investors. I've got more videos coming up talking about that and talking about why August is really the best month for investors of just any month for you to buy. This is your time. What also makes August fantastic is interest rates. I know we've all been sitting on our hands, not all of us, but a lot of us have been sitting on our hands because we look at these crazy rates. Now, for somebody that's older, been buying homes for a long time, these are not crazy rates, but for the folks that are mostly out there buying right now, it's like, wow, you know, I'm an investor and I've got to pay 6.625% and pay points to get it down to 6.625%. We're not going to talk about 20 years ago, 30 years ago. We're going to talk about today. So that was the way it was 2 weeks ago. But guess what happened? First of all, inflation numbers came in fantastically. Core inflation, 2%, Fed rate. Take out the volatility of food and energy, and that's what they were. So that gave the Fed, I think, a lot of confidence. The second thing that happened, and this was Friday, because rates started going down on Wednesday, then they went down again on Thursday, and then Friday came and the jobs report came in. And the jobs were way lower, way lower than what they were predicted to be. And rates dropped a lot at that point. In fact, remember that 6.625 I was talking about 2 weeks ago? Now it's 5.5% for investors with a little bit of a buy down. And remember, we can negotiate some points from the builder or from an existing home and help to pay for that. So 5.5%, and who knows what the rates will be maybe later, but basically the market has already baked in what the Fed has said, that, hey, it's coming in September. And that's what Jerome Powell said, September. He mentioned that. And so it gave the market, which is always ahead of the curve here, the ability to go ahead and reduce rates. So two things are really important for this week. Inventory, a lot of choice out there, deals, as well as interest rates going down tremendously. Fantastic time to buy. A lot of people are doing it. I hope you do too. Let us know if you're interested.